Oh my gosh, it's week 3, Cody. Week 3 of us going live every Monday through Friday. Every Monday through Friday on each of our individual channels. Cody, how are you feeling about this so far? Are you worn out? I'm worn out.
Yeah, in some ways I am. In other ways, I'm sort of like got lots of energy because feel like I've been learning a lot of stuff. So that's good.
Me too. Me too. Well, today I'm super excited. We've got we're talking about credit. Credit's like one of the number one things that so many people who are considering buying a home or agents who are considering working with buyers kind of get stumbled by, or like it's the roadblock that comes up for a lot of people. We have an expert with us today. I'm going to let you tee up the introduction, but I am so excited for today because this is a subject that is never ever off the table for any of my phone calls. Cody, please introduce us to our amazing guest.
Yeah, so I've known Todd for probably, I don't know, 8 or 10 years, I would think, and have referred lots of different clients over to him over the years for multiple purposes that need help with their credit repair. And I have just been always thoroughly impressed with his approach, the integrity, the way he approaches it, the systems that he uses, why he uses it. Like, he knows exactly what he's trying to do for the clients, and just super, super effective and impactful. So, yeah, I mean, Todd can tell us a little bit more about what he does, because I know there's lots of different types of credit repair companies out there. There's a few different philosophies on how to do it, and he has a really specific way that I just absolutely love.
I love it. Well, welcome, Todd. Welcome. Welcome
Thank
to
you.
the show.
Thank you.
Let me interject just briefly before we jump in, because I know this is a very juicy topic. My name's Lacey. If you are just brand new to this stream, I am here to help those who are considering moving to Las Vegas find their home, their place, their soft landing, if you will, in my beautiful neon hometown. Cody is my amazing collaborator. He's my mentor in this business. He's helped me become a better realtor. Cody is focused on helping realtors become better realtors. And so together we are like I don't know, dynamic duo, or the gruesome twosome, or I don't know, we don't have like the three musketeers. We don't have a third, although today we do. So Todd might be the third musketeer for today. But we really do work together to educate both buyers and sellers as well as realtors in one space, because we think that there's like a weird misnomer that like there's like some secret backdoor conversations in the real estate industry, that like we're having secret combos that like the clients can't know. So we're letting you know the clients should know. Here's what we should know. So thank you in advance for letting us join you. We're doing this for 2 audiences today, both realtors and buyers and sellers. If you're either of those human beings watching this, please do us a favor, drop it like it's hot in the comment box below. Let us know that you are here. Let us know where you're watching from. Let us know what you're here for. And Todd, we're about to put you on stage, my friend. Are you ready to show us your skills?
Hopefully, yes, I am.
Awesome. So tell us, I'm gonna jump in really first. Tell us how you got into this business, and then I'm gonna let Cody take over. But I'm always curious, did like bad credit lead you to this world, or like what got you into this role?
Yeah, actually, bad credit didn't lead me into this world. A former business partner, it was his idea. He used to buy homes on the courthouse steps, and then he was an investor, and then sell them to the tenants that he put into the homes, and he would fix their credit as they were living in his home, so they could buy the home from him. And so
Okay.
this was really his idea. I came from a technology company in San Francisco. I kind of brought the technology platform that we use, and I learned about credit from him. And so this was his idea. And then I kind of went the business development side. We really got into the builder business pretty strong, and that's where we kind of dominate today. But that's kind of where the direction I went. So it wasn't for my own personal struggle, but we started the company in 2004, and so February of 2004. We didn't get our first customer, I think, till June of 2004. But
that's entrepreneurship right there. Entrepreneurship at its finest.
Right.
I'll be quiet because I know, Cody, you guys have had a lot of conversations. You've known each other a long time. So jump in. I'll be quiet. I do know how to be quiet. Give me a second. I'll prove it.
Well, Todd, I've sort of alluded to it already, but there are different philosophies here. Would you mind just telling us to start out kind of what is your philosophy, and what specifically are you trying to do with your customers?
Yeah, so our program is more, kind of 360, where it's on us, but it's also on the client in the process. There's a lot of companies out there that just kind of do the same thing every single month. Their job is to keep the client in credit repair for as long as possible. Okay, we don't pay any marketing fees. We don't do any marketing whatsoever. All of our business is referral based, and so it's really the value that we add to our partners. That's really what our success is based on. And like a company called Lexington Law, their average hold time of a customer is 18 months in the program. Well, I came back to Cody and said, hey, Cody, your customer's gonna be ready in 18 months. He'd be like, really? And so our longest program is 6 months. If it takes us longer than 6 months to fix a client's credit, there's no further charge to them. Our average hold time right now of a customer in credit repair is 122 days. The average score increase is 83 points. And so we moved.
I'm getting all excited over here. Hold on, this is crazy.
But listen, this is not all on us. The customer has to be involved. And what we ask them to do, they've got to be as motivated to get into this home as we are to get them in a home. And if that's the case, then we're going to be successful. We pair every customer with a dedicated credit coach that works with them one-on-one through the entire process. And so it's not pay us a fee and magical things are happening. You're going to be involved. You're going to have to do some things. Establishing credit is number one. Like, so many clients get into a bad spot and then they only focus on the negative. There's a lot of positive that you can do yourself during this process that will really help things. And so just educating them, right? Like, and the hard part about our space and the reason why the interest is what makes common sense doesn't make credit sense. And so many people will think they're doing the right thing and it's actually driving their credit score down. And so there's just not a lot of good information, unfortunately, in this space.
Yeah. So one of the things that you sort of alluded to there, Todd, but I'm going to say just a little bit more directly is that I have actually sent Todd customers that were ready and willing to pay him for whatever he could show them how to do. And they've contacted me back and said, man, we talked with Todd. He told us to do these 3 things and said, you can do those. You don't really need to pay me to do those things. And so definitely could have taken advantage of them, but he didn't do that. And so when somebody does engage with him and he says, these are the things you should do, this is how we can help you, this will be the cost, to me, it's money well spent. And it just goes such a long way to increasing that credit score. And the results, they just speak for themselves. No question about it.
I love
Thank you for that. That's kind. Well, I mean, our program's fully guaranteed. So if we don't perform, customer gets 100% of their money back. And when we do the evaluation, we post it in the client's file. And so we break it down up front, what the client can expect from us and what we ask of them. And that's transparent through the entire process. So the consistency in our messaging is really important to the customer. It's not like, hey, I talked to eCredit day one and they're telling me something different. No, we're telling you the exact same thing the entire process. And so
that's really beautiful. Like I love that you're offering such a clean experience. There's so much scamminess out there in both of our worlds, right? Like we both unfortunately have to answer to a lot of bad behavior in our own industries. And that's just really terrible. So it's beautiful to see that you're willing to put your face online, to put yourself out there, to say exactly what you do and don't offer, and that you stand by it. It's really nice. I will say, for those of you who are watching, I'm going to interrupt for a moment and just let you know, if you are considering looking at buying a house at any time, even if it's not in Las Vegas, we really do want to help you connect with the people who can help you make that dream come true. And so Todd is one of those people who, obviously, Cody is known for 10 plus years. I'm now meeting this year and very impressed by. So whether we're involved or not, we really want you to feel comfortable to know that we're only going to put people on this screen who we know are going to do right by you. So here's Todd's information on the screen if you're interested. And if you are thinking about moving to Vegas, please scan that code in the corner. I'll be quiet. I'm going to let you keep leading the conversation. I'm being quiet. Please give me credit for being quiet. But I'm excited. I'm really excited about the fact that we have such an honorable entrepreneur in front of us, because it's in your industry specifically, and ours. Gosh, we sure do answer for a lot of yucky behavior. So
yeah, Todd, let's start with some of the basics, because I know that there are actually a lot of people out there who they just have the total wrong impression about what credit is. Can you just tell us basically what is a credit report? How does it get built? Maybe talk about the 3 bureaus, how they report, just the basics like that, so that people know what it is that these mortgage companies are looking at to get them qualified for a loan.
Yeah. So we'll start with the bureaus. There's 3 credit bureaus. The main bureaus today, Experian, Equifax, and TransUnion. They're independent agencies and they act as such. So there's no sharing of information. What actually really happens is the creditors themselves pay the bureaus a fee to report the information on the consumer's behalf. That creditor can choose which of the bureaus they want to report the information to, because they're paying each one a fee to report it. And so you get smaller creditors that might only report to one bureau. Well, what that means, if I'm just paying TransUnion, that account is never going to show an Experian or Equifax, because I'm not paying that fee. So that's how you end up with 3 different credit scores, and that's how you end up with different data across all 3 bureaus, is different data is being sent to each of those 3 credit bureaus. Okay. And again, when you're dealing with creditors, they control the information. Like, so many people, when they get into a bad spot and they're negotiating with creditors, they're like, well, the creditor said that the bureaus are reporting this and they don't have control. It's 100% false. The creditors control everything. Anytime you negotiate with a creditor, get it in writing from the creditor. That gives you leverage with the bureaus. The creditors dictate what's on your credit report. And that's a lot of consumers are like, oh, the bureaus are controlling. They're not. They are publishers of information, and they sell your information. And the bureaus themselves make more money with you with a lower credit score than you with a higher credit score. Why? It's tied to your interest rate. You're a 450 credit score. You're paying 29% on a car loan. Guess what? You're valuable in the marketplace. Someone with perfect credit's paying 3.5%. You're not that valuable, right? And so when it gets to errors and omissions and on a credit report, the bureaus have no interest in scrubbing what's on your report because it's against their self-interest, right? And so unfortunately, the space is really wide open, and it's really the consumers have to protect themselves. They've got to pull their credit. They've got to go over it themselves. And if there's errors on it, they've got to police themselves, unfortunately.
Yeah. And interesting to me is that we don't really have just one credit score. We have those 3 credit scores. And what I've observed is that almost always, if not always, the lender chooses that middle score as the one that they sort of use in all of their algorithms for their underwriting and stuff. So it is important to be ahead of all of those ones, because that middle score is the one that they will take.
Yeah. So how all mortgage lending works today is you cross off the high number, you cross off the low number, whatever that mid credit score is, that's your lending score. But it gets worse than that. So there's also different types of credit scores out there. So if you're looking at Credit Karma, well, you're looking at a Vantage 3.0 credit score. We subtract 60 points from that Credit Karma score to get close to the FICO 10, which is what lenders use. And so let's say I'm a member on Experian.com. Now it's the FICO 8. We subtract 20 points from the FICO 8 to get close to the FICO 10. So it depends on where the consumer's pulling their credit scores, what real score you're looking at, right? And so you have there's so much misinformation out there. You get clients that do look at Credit Karma. It's a great source as long as you know what you're looking at, but they'll take that 620 on Credit Karma, go to a lender, and now they're a 560, and now they're deflated.
Right.
They don't know where to go. They don't know what they're looking at, right? And so it's tough. And that's why it's so important when you're going through the buying process. Go deal with a lender, get them to pre-approve you, go have them pull your credit. So many clients are so adverse to having a mortgage lender pull credit because of the hard inquiry. Well, here's the reality on a hard inquiry. A hard inquiry is 3 to 5 points against your credit. Stays on your credit for 2 years, affects your credit for 12 months. Okay. Here's the other side of that. Every month that you make positive payments on all your accounts, you're building your credit score. So that 3 to 5 points on that mortgage hit that hit your credit this month, you're going to grow that again next month when you pay your bills on time. And so the fear in the market about a hard inquiry is way overblown. And usually it's the people with poor credit that kind of know what's coming, but there's real value in knowing where you're at versus kind of guessing. And so, in Cody dealing with you and going to like a carry, like there's so much value in having her pull your credit and find out exactly where you're at to build a plan.
A lot of times I talk to clients who are considering buying a house, and to your point, like when you have lower credit or you've had credit troubles, there's a shame component that comes into play with that, where it's you almost like want to be surprised by good news, but don't think good news is coming, which is never a good feeling. So what I try to tell people is like mortgage lenders actually look at a completely different system to than any of this stuff, right? They calculate it very differently, and it doesn't have to be a hard pull. It has to just be a conversation. And so, but the shame is the name of the game, if you will, when it comes to credit all in. And I love the way you just said that. Like if you are paying your bills on time and you're working really hard and diligently to be a good, credit, somebody who's been given credit, at the end of the day, like you're making up for any dings that you have happen, as long as it's not going to get missing payments or going against that whole vibe and mode that you're trying to be into. Talk to me about like when you talked earlier about like how the good versus the bad. There's 3 different credit. There's just so much information out there when it comes to all of these things. What are people doing that is negatively affecting their credit other than missing payments? What are some of those things that you said? There's so much information swirling. Credit Karma can only give you so much information, but what's the information we can give when it relates to doing the wrong thing to fix your credit or build your credit?
Yeah. So many people that have kind of gone through they've been behind, they've been in a tight spot. Now they're on the other side of it. And they're like, okay, what do I do to start fixing what I did yesterday, right? Or what I did in the past. And the first thing they do is they pull their credit report. They see everything that's negative on there, and they just start randomly paying it, right? Most of the time, paying a collection account will actually lower your credit score versus raising your credit score. And the reason for that is everything on a credit profile is governed by what's called date of last activity, which is the date you, the consumer, last made payment or charge in the account. So everything on a credit report is controlled only by consumer action. And so many people think, oh, my debt got sold to a new creditor and it restarts. That's not true. Again, everything on a credit file is governed by consumer action only. So let me give you an example. Let's say you got a collection account from 2020. You owe $500 on it, okay? You defaulted on it 2020, you get a letter in the mail from the creditor today saying, hey, we'll settle this for $1. I owed the debt, I should probably pay it. It's a good deal, let me pay the $1. By paying $1 today, you do two things. One is change the outstanding balance on your credit report from $500 to zero. The second thing is you age that debt on your report from 2020 to 2025. Okay.
Oh, no.
If you think about banking, what do banks care about most? What you did yesterday. What happened 5 years ago? As it amortizes on your credit report, it decreases in its importance because it's old data. So now by you paying that dollar, you've just changed the date of last activity from 2020 to 2025. That paid collections now stays on your credit report till 2032.
Oh, Todd, you're making me have a heart attack. That sucks.
It's not right, but it's kind of why we exist, to be honest with you. Had it stayed unpaid, it comes off your credit report in 2027. And so the first thing we tell clients, you're not going to end up with perfect credit because you don't want perfect credit. Us paying all and dealing with all your collection accounts is actually going to lower your credit score. Our job is the path of least resistance, leverage the dollars you have to the credit score output, and to try and remove as much negative information off your report. That's what we do.
Wow.
The first time that you ever explained that to me, Todd, my mind was just blown because I was just like, wait, if you just pay them all off, that's got to be better than not. It's kind of like in the mortgage business where people will say to me, before I go apply for a mortgage, should I pay off all this debt? And sometimes I used to think, well, that would make sense. But now I know that sometimes it makes sense to keep those assets because to qualify, you need the assets and the debt isn't really hurting you that bad. So it can be a little bit counterintuitive. There's one more thing that you sort of myth busted that I want to just add one part to that I think you've taught me before. And that is that if you have multiple hard inquiries on your credit from the same industry, at the end of 30 days, I believe that just all consolidates into one hard credit pull. So it's not hurting you for all of those people to be pulling your credit.
Correct. Yep. So, and that's for same with autos. Like, the average 620 credit score walking into an auto dealership right now, their credit report's getting pulled 11 times. They call it shotgunning credit. Why? Dealerships make more money on placing your auto financing than they do on selling you a vehicle. It's called a VIG. And so they're really shopping your rate. They're shopping your the placement of the auto loan. They're not shopping your rate. They're not trying to get you a better deal. They're trying to find out what bank's paying them the most for that deal. Yeah. And unfortunately, the space we're in, our clients, my average client's paying 18% on an auto loan and they don't know it. They know what their monthly payment is. They don't know what their cost of financing is, and they don't know how much they paid for the vehicle. And that's unfortunately just the level of education. Most of my clients just don't know that finance piece.
This leads us to the next subject, right? You just segued right into the next subject that I have to hear you say it again because I've heard you say it twice and I still don't fully believe it. So maybe this time I'll it'll sink in my brain. But you have taught me before that having a mortgage loan on your credit or an auto loan on your credit, even if you're paying it, is not as good at building your credit as another thing, which is credit cards. Can you explain that to us?
Yeah. So credit cards are the most valuable utility on a consumer's credit report. And here's why, right? So let's say you stop paying your mortgage, you start paying your car. There's an asset that creditor is going to grab, right? You go downtown, you buy a pair of Nikes, you put it on a credit card. That bank's not going to come get your Nikes, right? So there's a greater risk in lending, right? The other thing is the most leverage on a credit report from a trade line is what's called balance to limit ratio, or percentage of utilization. When you buy a car, when you buy a home, it's amortized, right? And it's over a number of installment payments, right? And so as that item ages on your credit profile, you consistently pay it down. Well, you can get a credit card today and you can have a $5 balance on a $200 credit card, which is 2.5% utilization, which is going to create the most value on a credit report. The other thing that doesn't make common sense, having a small balance on a credit card yields you a higher credit score return than having a zero balance because it shows activity. And so the deal with the banks, what the banks have with the credit bureaus is a zero balance on a credit card is the exact same as a payment made. So you can have a credit card in your wallet, use it once every 12 months. And on a credit report, it's going to show us 12 positive payments, not one. And so the banks give you a higher credit score return for actually using that card and managing it than versus having a zero balance. Yeah. And
Oh my God.
the reason why you want multiple credit cards versus one is the number of positive payments recorded on a monthly basis is factored in your credit score profile. So and we make all of our clients get 3 credit cards. And the big thing up front, a lot of our clients have filed bankruptcy. And they're like, Todd, hey, I don't want to get the credit cards because the credit cards led me into bankruptcy. It's not the credit cards that led you into bankruptcy. It's the irresponsible use of those credit cards that led you into bankruptcy, right? So let's start with
Tell it
that.
like it is. Preach, Todd. Preach.
But if you can't trust yourself with a $200 credit card, you're going to ask the bank for a $400,000 loan on a mortgage. Like, really, what are we talking about here? And so you've got to be responsible. And honestly, clients that are going through bankruptcy, this is going to sound insane, but the smartest thing that you can do is go get 3 secure credit cards. Why? Now you're going to show that you've reestablished yourself in the credit market, and you've also got some history tied to it. So you can file bankruptcy today, get those 3 secure credit cards, and be mortgage qualified when the 2 years lifts, and you qualify for a home.
See why I said we had to have this guy on, Lacey?
Louise.
I mean, this
I'm
is
like-
gold.
I'm like sweating right now. I'm like so excited. Todd, we need to have you on once a month. So that's happening. Sorry, you just committed yourself. I wanted to just take a moment and go to the comments. If you are watching, please, please, please just know our friend here. I'm going to put your information up here. Hang on one second. Todd is an insanely transparent, amazing resource. Somebody who's going to help you fix your damn credit. And so what I love about what you're doing here, Todd, is that you're just no bullshit. I'm just going to be very real. Sorry, but you're just like a no bullshit approach. And I love that. So what I want to say too is like, if you're watching, please comment below. If you have a specific question about credit, Todd's here. He's giving us his time. We're doing this once a month. Sorry, you just committed to it, whether you said yes or not. The world needs to hear people like you just giving it out there, giving it truth. Let me just jump over to the comments and tell you. Lewis, hey Lewis, good to see you, says this transparent approach is awesome. I've had clients use credit repair services and have had a worst score after the process. Has that happened with you? Obviously not with your team, but early days, or have you seen people come to you after paying someone else and you go, why would they tell you to do this? Like, tell me some horror stories.
Yeah, to be honest with you, most of our reviews, if you read our reviews, most of the clients have used 2 or 3 other credit repair companies and been unsuccessful. But here's the reality. Most people in our space really don't know how to fix credit. You can buy a technology platform off the shelf that is through Dispute Suite, and now you can say you know how to fix credit. And unfortunately, there's just so many nuances. And again, what makes common sense doesn't make credit sense. And there's not very many companies. Like, we work with 8 of the 10 largest home builders in the country. We've worked with Lennar since 2006. We've worked with Pulte since 2011, KB Homes since 2013. Like, we dominate the market, but we also know what we do, right? And there's just, I mean, I'll be honest, we don't really have any competition in that sense. And that's why we've had these partnerships for so long, is you produce value. There isn't that many good companies, unfortunately, in this space.
I'm giving you claps. These are claps. These are snaps, basically. Let me ask Leolo's question here. I paid off consolidated longstanding credit card debts last March. I pay the balance every month. How long would any associated credit score dip be reflected in my score? Good question, Leolo.
So if you paid off a consolidated, does that mean you went through debt consolidation? And so if you did, debt consolidation is credit suicide, and here's why. So in order to get leverage on your creditors for them to discount it, you got to go 90 days past due. Then what happens is you pay money into a trust account managed by the debt con company over the next 3 to 5 years. The problem is you went 90 days past due to start the process. Your account's going to be 90 days past due for the next 3 to 5 years. Debt consolidation is credit suicide. It's the worst thing that you can do for your credit. Bankruptcy is a far better option. And here's the other thing that these debt con companies are doing. So they negotiate for 50 cents on the dollar. Then you pay them a 20% fee. Okay, so you're paying 70% of the original value. Then they come back to you and they offer to finance that default debt at a 20% interest rate. You're right back to the same situation. And these people are doing it.
Todd.
Yeah.
Oh, I just started, it's like cold sweat now. Leolo, so the question from Leolo was, how long would any associated credit score dip be reflected? So if he paid it off, all of it last March, what does it take from that payoff completely out of your life?
Yeah, so 7 years from the date of last activity. So that's going to report till from May to June of 2031.
7 years from now.
Yeah.
everyone.
So,
Doesn't mean you
and
can't
again,
buy a house, though. Doesn't mean you can't buy a house. It just means your score will have a reflective, something of that will be reflected, correct?
100%. And that's the first thing
Okay.
you don't need great credit to buy a home. A 620 credit score is a C- in credit land. And so when you're dealing with your credit, you don't have to be that good. And
Right.
focusing on some of the positive, people don't realize that establishing a few accounts, getting some payment history under there, leveraging your balance to limit ratio, using credit responsibly, that will really start helping your credit score. So many
So the
people
old,
focus on the negative, and they need to
yeah.
start with the positive.
Yeah, I think that's a really good point. A lot of people assume any debt is bad, but actually debt can help you and will help you when it comes to qualifying for more. Leolo just clarified, no, I personally consolidated debt to one card, did
Oh,
not use an outside agency. Smart, smart. I would assume smart. I hope smart. Please don't correct
yeah.
me differently. But I just had debt on my card for years and paid it off. So it's been a year, a little over a year since Leolo paid all of his credit card debts off. How would you assess that situation?
Yeah, so his credit would have responded immediately. So what he did is he did a balance transfer on a credit card, and then he maxed out that credit card. The minute that you pay off that credit card, so your credit cards report to the bureaus once every 30 days. They're not in real time. So one day a month, your information gets sent in a batch file to the bureaus. So that very next month that he had a zero balance, his credit score would have done a full recovery. But I would have
Awesome.
told Leo, have more than one open active. We have all of our clients get 3 credit cards. Really important. The number of positive payments recorded monthly is factored in your credit score profile. So if you only have
Awesome.
one credit card, it weighs heavily. Whereas if you have multiple cards, it's not that big a deal.
So Todd,
Awesome.
is that the sweet spot, 3 cards, or like is it the more the merrier? And then a second part to that question is, should you try to get the most credit limit that you can and be constantly asking them for more? That's a question I've had over the last couple of years since I've been putting some of your tips into play.
Yeah. So there's a diminishing margin of return once you get past 3. Having 10 cards versus 3, of course, you're building more positive payments, but it's not the same as getting to 3. And then the second piece you asked about your limit, and it's all about your utilization. It doesn't go off your limit. It goes off, the lower your limit is, the more carefully you have to use the card. And if you're like that customer that, hey, I max out my card every month, but I pay it off. If you pay it off 5 days after it reports every month, all it's going to show is a maxed out credit card every single month. They don't go, oh, by the way, Cody pays us off 5 days later every month. They don't share that information. They only
That's
share what
really
your balance
helpful.
is in relation to the limit and whether the payment's on time. That's all they record.
If I contact my credit card company and ask them to increase the limit so that my utilization percentage is lower and I can show that that's, a positive thing, do they make a hard inquiry on my credit? Does that hurt my credit to ask them for more?
Yeah, so it depends, but there's real value in doing that. And if you're going to do that, what I would do is I would max out my credit card a few months in a row, and I would pay it off, because they do look at that. They're looking at they're trying to figure out what your discretionary income is, what your ability to pay is, and what their risk level is, right? And so if you max it out a few months in a row and you pay it off in full, they're gonna be like, well, this guy's got way more wherewithal.
Uh-oh, did we lose you?
Todd, your audio went out for some reason.
Maybe you came unplugged. While Todd's finding his voice again, let me just go over to the comments here. Thank you for everybody that's watching. We are talking about fixing your damn credit. If you're a realtor, please stay here. We'll do our thing. Are you good, Todd? Let's give him a second. Maybe unplug your headphones. Either way, if you're a realtor watching this, we want to let you know that Cody here is a mentor for a lot of realtors here in Vegas, as well as honestly worldwide, and is a really good resource for us to help connect with like the information that you may not know as a realtor. Todd, if you want to log out and then come back in and use that link, that's probably a good idea. That'll get you reconnected. I don't know if you can hear me, but no,
we can't hear you.
So go out and come back in.
Yeah, that'll work.
Go away and come back. There he goes.
While he's away, I can mention a couple of things that he probably would be too bashful to say himself. So he has already mentioned that if it goes past 6 months, there's no extra charge past the 6 month. But the reason he can be so prominent with that is because his average is only 4 months. And the average that he increases the credit score by is 80 points, which is usually a 40 to 50% increase in the score. So, I mean, it's just like the bang for the buck. And we'll ask him about cost here in just a minute, but the bang for the buck is just there.
Todd, are you there?
Yeah, can you hear me?
Yes, we can hear you.
Okay.
Welcome back, my friend. What I was
Sorry,
going
I
to
don't.
say is if you're a person who's considering buying a home or just has credit issues or just that shame game is in your world when it comes to credit, first of
Yeah,
all, no shame allowed. No shame allowed in this game. This
yeah.
is a game is what we're playing. So we got to figure out how to work that game. Todd is an amazing resource. I'm going to put your information back up on the screen here, Todd, because man, I'm sweating in a good way for all the information that you're sharing. And we've had some realtors already in the comments saying how amazing it is that you're sharing this so transparently, but then also just some people who are asking direct questions. And I love just how honest and open you are with your information. If you don't have to charge them, you don't charge. You're just here to give good info. And that's kind of how we do business as well. So thank you for that.
Yeah. All good. All good.
Awesome. Awesome. All right. Let me jump over to the comments again. And then Cody, you can tee up the next question here in just a
Okay.
second. Adventures of Mason says, I use my credit card for groceries and pay it off at the end of the month. That's pretty much the extent of my debt. I have 3 cards that I rotate. So what's advice that you would give him? You just touched on it, but let's give him direct advice. When should he pay that off every month?
Yeah, what he can do is he can actually call his credit card company and find out what date they report each month, and they report the same day each month. And then he can get his payment to them prior to them reporting, and that'll max out his leverage.
Awesome. So if they report on the 3rd of every month and making updates, make sure you're a few days prior to that. That way it's in, your money's in their hands. There's no question about it. And then all in, like then
Yeah.
you're actually getting the lift of what that looks like. That's really, really smart. I love this.
Yeah, and again, the game we play about having a $5 or $10 balance, we're trying to get every single point for our customer to get to that 620 number.
Right.
If you've got perfect credit and all that, you can pay it off and don't worry about that game. You don't need every
Right.
single point every month.
Right. You do not have to have perfect credit to buy a house. You do not have to have perfect credit to do anything. In fact, perfect credit doesn't always help you in this world, believe it or not. I want to just touch on a couple other things. Do you do anything in the rental space? We do, DJ. Please feel free to scan that code at the corner of the screen. We'd be happy to help you with rentals. Also asking about rent projects. We'll happily answer those questions when you do a phone call with me. That's my job all day, every day. I just want to be here to help guide you when it comes to moving to Vegas or really just helping yourself invest in Vegas, which is something that a lot of people still need credit for. This is a let's see. Keep going. Go ahead and jump into the next one.
Sure. So, Todd, tell us a little bit about the costs. I mean, obviously, you must be able to charge millions for what you do. And then after that, I want to just make a little comment about the value that you get relative to what it would cost you to do the same thing on the mortgage side.
Yeah, so our pricing is pretty standard. It's $190 a month for each month we think you're going to be in the program for a maximum of 6 months. So if it takes
Wow.
us longer than 6 months to fix your credit, there's no further charge to you. But
God, most
here's-
people pay more to go to the gym every month and they don't even use the gym membership. So this
If
is
you're-
awesome.
if you remember a lifetime, you do.
Yeah.
Yeah, no, but yeah, so the longest we charge is 6 months. Here's the reality: the further away you are from 620, which is our magic number that we usually try and get clients to, the more involved our customer's going to have to be, right? The more we're going to ask of you. And this isn't just pay us a fee and magical things are happening. We pair you with a dedicated credit coach that's going to work with you one-on-one. Yes, they're an accountability partner, and you have to do your piece. If you don't do your piece, even though you're paying us, we're going to stop the program. There's no point in you paying us when we're never going to get you there when you don't do some of the basics that we're asking for, right?
Right.
So, yeah.
I love that. It's like a weight loss coach. What did you eat today? What did we eat today? Let's talk about it. Yeah.
Given the fact that your average is just 4 months, the average customer of yours pays you $750. And I watch every day, I'm involved in the mortgage side too. And I watch every day where people will pay money to get their rate lower because it gives them the payment they want and it lets them qualify. And the cost of doing that is $3,000, $4,000, sometimes even more. So to be able to get that credit score, get that lower rate by paying $750 and improve your credit across the board on everything else that you might want credit for, the cost difference is so small that it's just like, I really encourage anybody who has any questions about credit to give Todd a call, even if you think that you don't need to improve your credit, because if you don't, he'll tell you. It's really straightforward with him, and the value is there.
I love this. Jeff in our comments says, my mom worked as a loan officer and manager her entire career. She always stressed on me to have good credit and how to do that. However, even I'm learning some things from Todd tonight. Great info. Thank you, Jeff. That's an awesome comment. We really appreciate it. Allie's here. Hello from Baltimore. Hello from Las Vegas. Leolo's asking a great question, Todd. Is there a good credit threshold that will allow for the lowest loan rates? For example, 750 better than 720. Any threshold ranges highly variable based on the lender? That's a good question for both you, Cody, as well as you, Todd.
Yeah, that's more of a mortgage question. I know enough to be dangerous. I know there's lots of different loan programs out there, and some of the different programs are tied to different rates. I do believe 750 allows you the very best financing opportunities. I do know that FHA 620 versus 750, you're paying the exact same rate.
Yep.
But yeah, 750 is premium. I think you will get the very best rates in this market, but it does fluctuate. Sometimes credit gets tighter, sometimes it gets looser. Credit is getting tighter right now. Right? Auto loan defaults are at an all-time high. Credit card defaults are at an all-time high.
Yeah.
The higher that gets, the less that banks want to lend, right? And so they're restricting financing right now.
No, thank you so much. Great answer. Another question from Tracy. Hi, Lacey, Cody, and Todd. Hey, Tracy. I got in late. This may have been covered already, but what are your thoughts on using a credit repair service?
I'm biased.
Well, here's the thing I'll tell you, Tracy, rewind to the beginning and hear exactly what this man offers, because it is like nothing else I've heard or known in that credit repair space. We as realtors, as well as car salesmen, as well as credit repair people, all kind of have to deal with the same thing. There's bad behavior from some people, which makes all of us have to answer to it. And unfortunately, there's a little bit of swindling happening on the fringes of our industries. Todd is not on the fringe. Todd is in the middle, and really has built a business that doesn't have a lot of competition, because you do it right, you do it well, and you do what's the good thing for this industry as well as for the client. So would you give us one more rundown of kind of what you do for people, just to make sure that everybody hears it loud and clear?
Yeah, for sure. So the first step in our process would be to get a copy of your credit report. From there, we'll do a free evaluation. We'll break the evaluation down into two categories. One is what the customer can expect from us, and then secondly, what we're going to demand of them. And so our program is about customer participation. We pair them with a dedicated credit coach. They are asked to do their piece. From our side of it, 7 laws and 32 articles that we leverage. We basically hold the bureaus and creditors accountable for not only what they're reporting, but how they're reporting the information. We're going to typically delete somewhere between 30 and 50% of what's negative on a credit report. What we care most about is driving that credit score, and we yield about 20 points a month. So for every 20 points away you are from 620 is typically going to be about 30 days in our program.
Wow. And the fees again, just to cover it, because I don't really believe you that that's what you charge. So if you could just say that again.
So it's monthly payments of $190 for each month that we think you're in a program. So if you come to us with a 540 credit score, on average, you're going to be in a 4-month program. It's going to be 4 payments of $190 for total.
And you do not really do programs longer than 6 months, because that's your timeline. That's what you try to focus on.
So we do, like, we'll take clients, like if you're a 450, 470 client, you're going to be in the program longer than 6 months. Here's the reality. We're going to work with you. We're going to end up working with you for free. We don't mind doing that as long as you're committed, right? Okay. If you're not as motivated as we are to get into a home, then we will stop working with you.
I just want to cry right now. It's such beautiful. It's so beautiful to see people out there doing the right thing and doing right. I feel like good out equals good in. What you put out is what you get back, right? And that's beautiful.
So what I learned a long time ago, you cannot judge someone based on their credit score. I've had 450, 460 clients that are amazing. And I've had 590 clients that all they have to do is trip and fall, and they'll get to 620 and not make it. So you can never judge someone based on, like, things happen to everybody. It's not about what happened. It's about where you go.
Yeah. I love that.
I'm with you, Lacey. I couldn't believe it, because I asked Todd before we got on, hey, with inflation, for sure your pricing must have gone up, because the last time I asked him this was a few years back, and he was like, oh, actually, no, we've held our pricing the same. And I'm like, inflation, bro. Like,
yeah.
Just warms my heart, Todd. It really, I wish I could hug you. It's probably would be weird, so I won't do that. So I'll just do a virtual hug. I just want to put this up here. Chris says, I'm probably never going to buy another house at this point in my life, but I watch you religiously because you're entertaining, and I always learn something that may be useful down the road. Chris, thank you so much for saying that. You are the kind of people who are leaning in for the right reasons. Whether you buy a house or not is not my goal. At the end of the day, my goal is to do exactly what you just said, which is provide good, useful information that, even if it doesn't apply to you, that you can share that with your friend, with your neighbor, with someone who you bump into on the street. And I hope and pray that everyone watching this realizes that Todd is a unique being, like myself and like Cody, where all of us are here with our open arms and open heart, just trying to say hope of home ownership should be alive and thriving in the world, right? At the end of the day, if you're a realtor and you're trying to help people find a home, if you're not trying to buy a home, but your neighbor might be, regardless, that should be a sentiment that is not something that you have to fear or feel like you have to be perfect to achieve. And I think that people like Todd, who are here very generously giving of their time, their energy, their resources, and just their knowledge, like, damn, dude, you're knocking me down a little bit tonight, is just proof in the pudding that I think that we're going to be able to do exactly what we're all aiming to do. So thank you again. Really means a lot. Thank you for that as well, Chris.
You know, there's there's so many people out there who are not buying a home because they think they don't qualify, or they think their credit's too low to do it. And that to me is the saddest thing, because it's relatively easy to find out if that's really the case. And sometimes that is the case, but to just assume it and not actually know it is just
Yeah.
rough. And so related to
Cody,
that, the question
Cody,
that I've got.
here's the other piece. Like
Go ahead.
you mentioned earlier about me, doing reviews for some of your clients and sending back and saying that they can do this on their own. Too many customers look at their credit score and judge where they're at based on their credit score. The credit score is only a piece. And
Yep.
if you're looking just at your credit score, you might not have that much wrong that will really improve your credit. And so you might look at your score and be, okay, I'm 60 or 80 points away, but it might not be that hard to get you there. And
Yeah.
so for those people, I would be, getting a little bit of information, and again, focusing on the positive. It's not that hard.
Yeah.
Most people are closer than they realize.
So
A lot of
that's
people-
my next question, is that
Go
I
ahead.
know there are people watching this that are thinking, wow, I wonder if I'm one of the people that should call him. So what is your wheelhouse customer? What questions should somebody be asking themselves? Like, maybe they are watching on Credit Karma. What score range would you say, boy, you probably would be somebody I could help? Or I don't know, how do they know if they should contact you, or should they just contact you?
No, so I would tell you, for a client that's gone through the storm, right? They're on the other side of it today. They're in a position where they're paying their bills on time. They're starting to save a little bit of money, and now they can kind of fix what they did yesterday, right? Like, again, our program, we're not going to remove everything. We're going to help you be strategic in who you should go after in paying certain creditors. We only engage those creditors that will do what's called a payment for expungement or a deletion agreement. So we're not going to have you pay everybody, because paying some of the people is actually going to lower your credit score. But if you can't pay your bills, like we tell our clients, and it's not great for us, but we should be the last bill you pay each month. If you can't afford your bills and us, I can't fix your credit if you're late on your car every month. I can't. And you're not going to be happy with the results, right? And so you got to be through the storm.
I can't.
So Todd,
I'm done. I'm throwing in the hat. I'm done. You're too good. You're too nice. I'm done. I'm out of here.
Is part of your service where you'll actually help somebody negotiate with the creditors to try to negotiate a good payoff deal?
Yeah, so we'll teach you how to do it. We'll tell you what to expect. When
Okay.
we get on the phone with you, you lose a lot of your leverage. So the collection agency is going to treat us like a law firm, and they're going to go by the book, right? So we're going to prepare our customer. There's a law called the Fair Debt Collection Practices Act. We're going to have them read that. We're going to teach you how to negotiate. We're going to tell you where to start, what this creditor is willing to do. Like, we're going to give you all the insight so you know what you're walking into, right? So we're going
Wow.
to give you the confidence and all that, but you're going to make the call yourself, but you're going to be prepared.
Cody, you prepped me saying you're going to love this guy. You're going to love this guy. I'm like, he'll be fine. He'll be fine. I love you, Todd. I want to marry you, Todd. What's going on here? This is crazy. It's amazing. I'm super, super grateful for this time. I don't mean to keep jumping away, but we do have a lot of activity in the comments. I want to make sure anybody who's watching hears us loud and clear. You are likely ready to buy a house, or closer to being ready to buy a house than you absolutely might think you are. Credit Karma is there to make money on you. There's a lot of marketing behind that, so don't necessarily trust those numbers. But if you're going to go by those numbers, just know Todd or some of our team, from the lending perspective, can help you refine that and figure out if that's really true or what that looks like. Please do not let shame be part of the game when it comes to you considering bettering your future and bettering yourself for, being able to retire someday because of investment. Vegas is at a moment, we are just talking Vegas right now, but this applies everywhere. We're at a moment where, we're going to be in 5 years, that place where people like, I wish I would have bought Yahoo stock then, that Apple stock, if I only. Vegas is really in that scenario right now where we are booming, we are growing. So don't let this time pass you by. If there's a moment or an opportunity for you to just ask the question, we're in a judge-free zone on my side of the table. If you're a realtor who doesn't know where to begin to get your clients ready to go, we're in a judge-free zone from a realtor perspective. Cody can help guide you. We want to help you understand how to best serve the community or best be a part of the community when it comes to making it rain when the sun is out there shining still, like making it all work. So Todd, thank you for all of this. I want to jump over to the comments one more time, and then I'm going to let Cody wrap it up and do whatever's next. But I just wanted to say, Steven says, Todd sounds great. Great people do great things. Thank you for helping others. Thank you for that. Allie says, hopefully Las Vegas should grow, hence houses out west in Silver State, and should appreciate over time. They are doing that right now. Would you say houses in nearby Laughlin and Pahrump are more affordable versus Las Vegas and Sin City metro area? Yes, they are more affordable. affordable. The further away you get, the more affordable they are. And again, affordability and credit and all those things kind of tie together, and you won't know the answer to the question about you until you ask. And so come to the judge-free zone. We're here to answer that question openly and honestly for you.
So Todd, I have a couple of quick things that I think would be really good for us to wrap up with, or whatever else you want to talk about. But how does somebody know when they've kind of completed the process with you? Is it just a function of now the score is at the objective score, or is there some other metric that you're looking at that would identify them as being completed?
Yeah. So for most of our customers, we're just trying to get them to 620 to get them under contract. And so we'll do soft pulls, we'll do consumer pulls while they're going through our process. And then when we think they're close, we're going to send them back to that LO, the loan officer, and we'll get validation from them, and then we'll graduate them. We'll get customers that will come back to us, and even when they leave us at the graduation point, we give them a credit action plan of where they go from here and how to go about it, right? And there are other customers like, hey, if I keep paying you, can you keep helping me? It depends. Sometimes it makes sense. Sometimes it doesn't make sense. Be honest with you, most of the time it doesn't make sense because we've exhausted what we can do. Really, it takes a little bit of time and it takes some leveraging those accounts. But the odd time it's like, okay, yeah, it makes a little bit of sense here. It depends on where you're trying to get to and what have you. But what we do, to be honest with you, we throw the kitchen sink at it early and we go after it hard. So it's not like we have a lot of plays in our playbook at the end where we're like, oh, we kind of held out. We're trying to do everything as quickly as we can for you, to get the result.
So Todd, I once asked you a question and I wrote down the answer, and I am not kidding when I tell you that about every 3 or 4 months, I go and I put this in the notes of your contact in my phone, and I go read this because this is something that I want to always be aware of. I asked you, what is the best thing I can do for my children and the people that I love to get their credit score as good as possible, as fast as possible? And this is what you told me. I'm going to read it because I read this all the time. You said, the day he turns 18, have him go get 2 secured credit cards in his name and add him as an authorized user on 2 of your oldest credit accounts. He will instantly have an 800 FICO score because he will have a good credit history that is older than him.
Yeah.
Wow.
And
That's gaming the system right there. I love that.
I have done this with 2 of my children, and it is no lie. It was instant.
Yeah. Yeah. So the difference between a responsible party account and an authorized user is an authorized user. If I add Cody to my credit card this month, next month, the credit card I've had for 10 years, that full 10 years of history goes on my credit report. And so that's where adding an authorized user in conjunction with, responsible party accounts really maxes the system. Yeah. But, so many parents will do, hey, I co-signed for my kid because he didn't have credit. If you would have just went this version, you had no need to co-sign. And about half my conversations every day are about parents that are paying their clients, their kids' credit or the auto loan, and they're late every month, and they didn't know about it, right? And what can I do about it? Unfortunately, you're a co-op. It's like it was your own account. There's not much I can do for you.
Yeah. Anything else, Lacey?
I don't know, man. I'm just in awe. I'm super grateful for you. We got one other question in the comments, and I think we can wrap it up. But first, 2 questions. First and foremost, would you be willing to do this again with us, maybe in a month or 2 months, and just keep this conversation going? I think we need like the 3 Musketeers approach. I'm not sure, but I just feel like this could turn into a beautiful thing. So I got a yes.
Yeah, sure. Yeah, absolutely.
Yes. Yeah. Awesome. And then secondly, Leolo's asking, I think the great question to wrap it up, because we are here talking about home ownership and the hope of that. How does getting a mortgage affect your credit score? Is there a rough range your score might drop?
Yeah. Most of the time, adding a mortgage to your credit report will drop your credit score because it's a brand new trade line, no payment history. It's a fairly large amount, right? As you make positive pay on time, because getting a mortgage, when it hits your credit report, all you've shown is you've been approved for it. You haven't proven that you can afford it, right?
That's a good
point. So after about 12 months of payment history, your credit score will rebound. You have proven now you can afford the debt. It's going to start helping your credit score a little, right? In terms of the rough range it'll drop, a credit report's like a fingerprint, right? Everybody's got a unique set of circumstances, how long they've had credit, how many trade lines. So there's not a specific number I can give you. I can tell you the more open trade lines you have, the less that mortgage is going to hurt you because you've got more open trade lines, right? If you only have one auto loan and one credit card and you had a mortgage, it's going to have a significant impact to your credit score, right?
For anybody, thank you for that. For anybody watching who is interested in just inquiring about like where you stand and if you need help, please utilize the information on the screen. Todd is in an open book, as you can tell, an amazing resource. My new best friend. I don't know if he knows this, but my new best friend. And for those of you who are realtors watching this, just please know that like there are people out there like this. That will open their arms and do the right thing by your clients. You just have to do the due diligence of finding these types of people. So I'm grateful that Cody, you brought Todd to the forefront today. Todd, this is amazing. We'll have to do lunch, something, bring your family so it doesn't get weird, but super excited that we met you. And I'm just grateful and I'm looking forward to this. I would say we will probably do another interview with you, Todd, next couple of months. I think this is a really, really good topic, especially as the interest rates change and people start getting back on track with wanting to maybe buy a house. We want to make sure that they know the reality, but the shame cannot be a part of the game when it comes to buying a house. There's no reason for it whatsoever. When people like Todd are by your side, and people like us are over here rooting for you, I think that it's just nothing but a win-win scenario. What are your thoughts, Cody?
Yeah, no, I've always really appreciated Todd's approach and just grateful that he gave us more of his time tonight.
Yeah.
Thank you guys for the opportunity.
Yeah, awesome. All right, Cody, I know you have a few announcements that you want to make. I just want to basically say we are doing live streams every Monday through Friday on both my channel and Cody's channel. It's been a lot. We're exhausted, but we're still doing it. Cody's doing this to educate realtors. I'm doing this to educate buyers and sellers who might want to move to Las Vegas. I am genuinely interested in your feedback. So do us a favor, drop it like it's hot in the comment box below and let us know how we're doing. We've got some really cool stuff coming up. I know, Cody, you've got some fun stuff with other guests this week, and I've got some fun surprise, possibly at a pool. Not so much of a surprise, possibly at a pool this week. So pool day, possibly with Lacey. Cody, what you got?
The realtor group that Lacey and I are in, every year we do a massive service project to benefit a veteran. We're talking about a renovation that usually costs between $50,000 and $60,000 all in to do it. This year we're doing another veteran, but it's really an interesting case because this veteran has a nonprofit that benefits other veterans. So by helping Bob, we're helping all these other veterans. And so it's just a huge win-win. And we could use the help of everybody who is watching this. In the description of the video,
Is that it?
Yeah, that was it. You had it. You had it here.
There we go.
So that right there. Go to here. Let me go to a different one here. Right here. Okay. So this is the Eventbrite page. I'm going to put in my videos the description to the link to this page here, this Eventbrite page. And on here, there's multiple ways that you can help us. One is by coming on October 6th to just be a part of the work. We actually have a lot of the labor covered. So if you would be willing to maybe make a donation, this link will also be in the description of the video where you could donate to help us. Where we get about half of the stuff donated. So we have to raise about $25,000. We have about 7,000 raised so far. So anything that anyone would do to help us would be appreciated. And then you'll notice that in the description here, there's actually some items that these veterans need. And so if you see one of those items and you think, oh, I could buy that and donate it to these guys, then you can also reach out to us. And we would love you a long time if you'd help us out with that.
I want to just reiterate for those of you who are watching my channel, I have not mentioned this yet. I'm actually going to be doing an entire live stream dedicated to this subject matter, this give back to our community. We do it every year. This year is probably more special than any of them that I can recall because of the fact that we're helping a veteran who helps veterans, right? So this is a multi-layered approach. So thank you for bringing that up, Cody. Stay tuned this week as I go live. I'm going to be getting into more details, but I'm going to be asking for your help. Whether you're a realtor or not, you better get that pocketbook open. Let's go.
Yeah, it's going to be great. It's going to be a great event, and it's always been amazing. The results have been amazing, and this year is going to be no different.
Yeah. Thank you again, Todd. This has been an absolute pleasure. I know that for realtors who are watching, please check out Cody. His information is in the description of his videos. If you're looking at moving to Vegas or just anything related to learning about moving to Vegas or investing, you know how to find me. There's a QR code somewhere online, and there's also a link in the description of this video. You ready to wrap it up, Cody?
Yep. Thanks, Todd. Appreciate you.
Thank you, Todd. We really appreciate you guys. We'll see you next time. Stay tuned this week.
Bye,
It's
everyone.
gonna be a fun week. Bye.